Welcome to Impact Investing, brought to you by the Supporters Fund, the home of 180 languages, Toronto, Ontario, Canada. I'm your host, Jeffrey J.P. Potvin, and let's please welcome from the Sunshine Capital of Canada, maybe the world, Edmonton, Alberta, Mark Mitchell, General Partner at We Venture Capital. Welcome, Mark. It's a real pleasure having you join us today.
Yeah, thanks for having me on, Jeffrey. I'm super excited to chat with you today.
Likewise. It's been a few years that we've known each other. We come across each other at lots of different events. We've had lots of great discussions. I'm excited because, one, you've traveled around the world, and not everybody gets that opportunity, and I'm a big fan of that. And I just think a lot of that carries into culture and just really anything and everything to do with how the world operates, especially when it gets into early stage investing. And you've obviously spent some great amount of time diving into this and investing. So why don't we kick it off and get this show rolling? The way we like to start is we want to hear one thing about you that nobody would know. And then, of course, we'd love it if you could deep dive back into your past and share a bit about your journey, including and maybe even going back to the days, your uni days in Alberta. So I turn it over to you and looking forward to hearing the journey.
Yeah, for sure. So I guess just by looking at me, most people would definitely not know this. I actually speak Mandarin Chinese, so I spent about 10 years studying Mandarin in high school, firstly, then went to China for a couple years for university just to study Mandarin, and then all throughout my undergrad at U of A, grad school, like I was going back to China for different programs, studying Mandarin, and actually spent about 5 years in total living in China. So that's like a huge part of my life. Up until 2020, so kind of first decade that I was out of high school. So I graduated high school in 2010. That first decade, I probably spent about 7 of those years outside of Canada. So, and a lot of them were in China. So yeah, definitely speaking Mandarin would be one thing that most people probably wouldn't know about me.
I love it. That's awesome. It kind of reminds me of an interview I had the opportunity of doing with Jesse from TNT. He spent a lot of his post high school all the way through to the last couple of years also traveling around the world. I'm not sure he picked up language the same way that you have, but being that you're in the kind of the same area and certainly in early stage investing, it's pretty cool. And as a person that has been to China multiple times, I'm a huge fan. I think we're always going to be fans of the areas that you tend to blend in quickly with and be able to see, and they have so much culture there. It's incredible. And of being able to speak the language is also pretty phenomenal. It's a tough language to learn. I've got probably 1% of the language, but I'm a big fan that you've mastered this language and be able to use that on a regular basis. That's pretty cool.
Yeah, I mean, I wouldn't say I've mastered it, but I did spend like a decade studying it and obviously living in China and using it as my daily language for the whole time I was in China. So yeah, it's pretty good. I have Chinese friends here, which really helps. I still get to practice. But yeah, it just takes time like anything else, right?
No, it really does. And the tonation and the way you change while you're talking, that I think that also is a little bit different from most languages, especially, of
Yeah,
course, English. So there is a lot of cool things that have really been built around the language and culture.
for sure.
So now taking that time period and everything that you've done, maybe you could share a little bit more about kind of what that experience was like living abroad, working in another country, going to school in another country. What are some of the things that you kind of gained from that experience before you decide to make your way back into to Canada?
Yeah, for sure. So the first time I went to China was in 2006. So I was 11 years old, just going into grade nine. It was kind of the summer between grade eight and grade nine. And then I ended up studying Chinese in high school. Had a good friend. His parents were from Beijing. They were wanting him to study Chinese. He said, "Hey, can you come in this class with me?" I said, "Okay, cool. Like I just went to China last summer. Maybe it'll be fun." And that led me to actually going to university then for a couple years in China right after high school. That led me to coming back to the U of A, studying Chinese at the U of A. So actually, one of my undergrad degrees is literally in Chinese language and literature. And then for grad school, I also got to spend some time in China while I was doing my MBA. And then after grad school, I actually got an opportunity to work for a family office in Bangkok. And part of that job was going to China, mainly Shenzhen and Hong Kong, for business. So there was like many years where it kind of went from just studying it as kind of a hobby in high school to actually living there and studying it like full time in university. learning the language pretty well, and then actually using it in a business setting, which was pretty awesome. So yeah, I mean, it's a huge journey. Like, I think, the one of the cool things of going to a place like China when you're used to, living in Canada or the US or, any kind of Western country, it is like so different. I think like, any of these kind of like ethnically homogenous societies like China or Korea or Japan, you definitely stick out, really, really obviously as like a foreigner, right? But then when you can learn the language and you can understand kind of the deep cultural, history in those countries, China is like, they've been around for thousands of years. There's so much history. There's so much like meaning with the words, like the characters, the food. Everything is just so rich in like culture and history. So it's completely different than Canada. Like we have like one millionth of like the cultural fabric as a country like China does, just because we haven't been around for very long. And once you start like learning the language and you start building relationships with locals and understanding some of these things, it's really fascinating. So that's like part of it is kind of just the complete opposite of like how we think of culture in the West. And then the other part of it is like when I first went to China, again, 2006, it was very primitive in terms of like technological advancement. There wasn't a lot of cars. A lot of people were riding bikes. I think a lot of people maybe still have an image of China in their head, or maybe not as much today, but for sure a couple of years ago, people riding bikes and just more of like a primitive kind of society. Whereas through that time period from 2006, I was the last time I was there was early 2020. So that evolution was so rapid in terms of like technological advancement. So you had companies like Alibaba and Tencent and Baidu, and ByteDance, obviously, that have emerged at Pinduoduo, all these trends like e-commerce, online shopping, rapid next day delivery, like food delivery, like all these things. Uber obviously is a San Francisco company, but there was an earlier company in China that was kind of doing that even before Uber. So there's like all these technological advancements that happened in that time frame, and it just the society progressed so fast. So being able to witness that firsthand, I always thought it kind of it gave me a glimpse into like what I would expect to see back at home. So like I would be in Beijing and I would be ordering stuff from Alibaba and I'd get it the same day, or I'd order food delivery. And then I'd come back home and sure enough, there's like Skip the Dishes is starting and like, people are starting to order more and more on Amazon and there's Prime delivery. Like, so all these trends, I felt like I got a real good like glimpse into what was going to happen back at home. Granted, of course, there's places in North America where that stuff was happening at a, similar clip as in China, but definitely not in Edmonton, Alberta. So yeah, that was really fascinating, and I think that was definitely one of the things that got me excited about working in technology is just having that firsthand experience of seeing like what happens in an emerging market and how quickly things can shift.
It's pretty fascinating. We were both there around, similarly around the same time. And I felt the same way that as I was making my way throughout most of China, I found that it was still a little bit closed off. And what was cool about that was the experience that because it was still closed off at the time and there was a lot of bikes or mopeds and tuk-tuks, everybody ripping around, is that they maintain a lot of the culture. But as time progressed, as I went back for the Olympics, went back for other major events, you could see such a fast change happening in their country. And, you could say that it was because they were trying to be innovative, all these great things. And I think really what it is when you have such a large population and North Americans were always looking at, and this was where you have a communist country and you're able to control price points and control labor costs, everybody in the world just started to open up and start putting all their manufacturing and production there. Well, 20 years later, what do you think is going to happen when you're putting all your manufacturing from the highest tech to the lowest tech into a country? You're educating a population that never had that exposure to now creating a dynamic that you can't stop, right? From educational systems that have overcome what it is even in here in North America. Now you're having a shift, whereas every Asian student wanted to come to Canada and North America for education. They're now saying, we don't need to go there. We have better education systems here. We're actually doing better and are stronger. So it's culturally shifting, and they're being able to control more of that again. And North America is now fighting with, well, should we outsource here? Should we outsource somewhere else? And now you've got this divide that's occurring. And yes, it's still controlled, it's still managed, but man, are they innovative, and boy, are they moving fast. Like they're becoming the forefront. You said Alibaba versus Amazon. One of them came before the other, but today you're seeing a lot more early stage tech companies coming out of China that are just blowing the socks off, and now we're almost copying them.
Yeah, it's interesting, hey? How it was first like, let's outsource just manufacturing, but now it's become where actually a lot of the IP, like a lot of critical IP, is either similar kind of level or quality in China, or it's like better actually. So I don't know, like it's yeah, there's a lot of pros and cons with how that kind of last 20 years played out, right? But it's interesting.
Agreed. Totally, and the countries, I think, regardless of all of the politics that are based around it, even when your time spent in India, you start to see a lot of countries that are now embracing the innovation, embracing early stage startups. They're all trying to look for and support something, which I think is phenomenal and about time. Because when you look at the whole world, is really 95% of countries are made up of small business SMEs. And they just aren't recognized as that. They just look at the big corporations and say, well, they pay taxes, they help the country, we should just back them. And there's a lot more meat and potatoes that you can get behind and put more behind if you do focus on the small, medium enterprise businesses. And you probably saw that and witnessed it, as you mentioned, over the last 10 years of going in and out of China, India. You can start to see that these are becoming such a crucial infrastructure growth, and of course balancing out their GDP. It's bringing a lot of value to the country, and now they're starting to say, hey, how do we put more emphasis on early stage companies? And that kind of transitions into where you guys are today. Is that there's you're obviously focused on this early stage space. Did you start to see that while you were spending your time abroad, that this innovation tackle that they were all working on was really starting to interest yourself? Not so much of the fact that you could transition when you came back to Canada, but more of how fast they were using technology and innovation to grow their country, that you could see the same happening in North America that you want to be part of.
Yeah, I think that's part of it for sure. Like I think there was a lot of inspiration from just seeing, the rapid evolution of a society like in China, or like when I spent time in India, working in Bangalore, or even in Thailand, like kind of similar, like that emerging market, things are progressing super rapidly. And then I came back to Canada, and I'm again based in Alberta, and that was early 2020. So like the tech industry really, I think, has started to grow much faster in the last few years in Alberta, Western Canada. So I felt like it was very like almost a similar feeling to kind of like an emerging market abroad that I'd spent time in, like in India or China. And I know it's not the same at all, but it felt similar in terms of like people were getting excited about technology. There was more, venture capital dollars going into companies in Western Canada. And I felt like I had an opportunity, and that's frankly what I feel like with Weave, is like we have an opportunity to be one of the first like true institutional early stage investment firms in this geography, because there frankly just isn't as much venture capital dollars going into Western Canadian companies as there is in Eastern Canada, certainly not in the US, right? So it feels similar in terms of kind of like an emerging market within a obviously developed country.
Totally agree. And I think also there's another added value point that's really changed too since in the last, I'll say last 4 years, but probably I'd say maybe it's the last 10, and you'll know this better. But you also have a huge shift that's going on in the eastern, in all of Canada, but specifically on the eastern side of Canada, where you have an influx of immigration that's changing the dynamics. So you're getting new ideas coming in. People are looking at, how can I create a job out of this? Oh, I see a problem here. How can I fix it? I think that you're starting to see that change in small business. There's more small businesses that are starting up, and they're building into the existing ecosystem. So people are starting to look at, like you said, you have skip the dishes. No one would have ever believed, do we need to do this type of short haul food delivery when we're in rural areas? And then all of a sudden that expanded and obviously took over massively. And you're starting to get a lot more companies that are doing the same thing, where you're seeing that they're filling the gaps that weren't filled before, and they didn't have perhaps the population to fill those gaps. So now entrepreneurship is really exploding. as I've spent lots of time with the different universities down there in groups, it seems like there's a lot more interest, demand, support. It's pretty exciting, actually. It feels like it's early stage tech ecosystem being built in Edmonton, Alberta area because it's something that maybe wasn't there 10 years ago.
Yeah, totally. There's a lot of like optimism, and it's very inspirational to be in a city when things are, progressing so fast, right? I think Alberta is like a great kind of testament to that type of sentiment, of like optimism for the future.
And do you think that with the change and shift in oil and gas, that once they realized they needed to start to focus on other areas because everything was so heavily dumped into one area, you've got farming and maybe and agriculture, and then everything was oil and gas. Do you think those types of government intervention has been supportive and helpful in kind of building up this ecosystem, or where do you see this change is happening, and where should people start looking if they want to build a company in out west?
Yeah, I think, I mean, I have mixed feelings about kind of like the government intervention. I think kind of in terms of getting like the innovation economy started, like there's definitely things that are insanely helpful, right? Like we have Alberta Innovates, which is, a large government agency in Alberta that is funding a lot of these early accelerator programs, providing early stage, non-dilutive financing for startups. Like that is, it's awesome because, again, like us investing risk capital at the early stage, if we can have the government also like put in some non-dilutive, give the company extra runway and not have to get diluted the same as you would in a different geography where you don't have that non-dilutive support. That's awesome. I love that. The only thing is like it's not a sustainable model. So I don't think you can do this forever. Like you need to do it to a point where, government and private enterprise can kind of agree, okay, we're good now. Like the private market should now come in and take over. Like the government should start to slowly kind of pull their hands out of the market because one of the problems with too much government intervention is you start to have, you know, the the natural market forces start to get a little degraded, and people don't really know where real equilibrium between supply and demand actually is because the government's been stepping in a little too much. So you don't want to get to that point, right? I don't think we're there yet in Alberta, but it's just something that people need to be super cognizant of, right? Like these programs are awesome. I take advantage of them. Our startups take advantage of them. I love them as an early stage investor, but too much of it starts to degrade kind of natural market dynamics, which can cause issues in the future. So yeah, like I said, I have kind of mixed feelings.
It's a good point. Like I do think that somewhere along the line, when you're building a company, handouts were great to get you off the ground. But eventually, if you keep utilizing them, and you see this all the time, where even large organizations are dipping into uh, COVID packages, whatever it might be, when they don't require them or need them. So they're just looking at ways to bump their value and getting back money to investors. And is that really strengthening the company or weakening it? Is it just struggling to look for handouts instead of actually finding ways to generate better value?
Good point, right? And like at the end of the day, like Canada as a whole needs to think about how do we increase productivity. Productivity per citizen is really like what we need to increase, right? So there's going to be a point where there's going to be too much kind of government handouts or government um, programs or government funding, and we just need to focus on how to increase productivity. I don't, again, like we're not at that point yet. I think right now we're still at the point where we need to spur a lot of early stage innovation, so these programs are insanely beneficial, but there will be a point in the future where everyone's going to kind of have to take a step back and be like, okay, are we at a good place where this can now be sustainable with just private market forces? Um, because too much government intervention can definitely cause issues. So that's something that I think a lot about.
No, it's a really good point. And when you step back and take a look at that strategy and that broad picture, markets run laissez-faire. You want hands off as much as you can so they can grow and be competitive. And to your point, if it goes too long, then it becomes constrained, and then people don't want to invest because it seems like they can't actually make an upside value to it. And you're seeing that along the lines over the last couple of years where too much government intervention has actually killed industries or had, especially in the sustainable side, it's had mixed feelings with the amount of support it's getting because the companies don't survive and then they fail. People walk away losing hundreds of millions of dollars. So I think there is to your point, there is a fine point where there is a cutoff where you kind of have to be able to survive and move forward and build a great growing company. And can you do that on private sector money that allows venture capitalists to make their take and everybody else along the way through each series as those businesses grow?
Totally. Yeah, there needs to be like recycling of capital, right? From the private sector, which we're not there yet, unfortunately, in Western Canada. There just hasn't been as many exits yet. And again, I still think we're, relatively immature ecosystem. And so once we get to the point where there is those recycling events and investors are getting their capital back and they can recycle it back into the next, idea or the next opportunity, then that's a time where everyone's going to need to really take a breather and say, okay, like, how do we cut back some of these programs because we've now reached, a place where recycling of capital is taking place.
You made the point, or in one of your previous podcasts, you talked about it. Of course, you're known for running an angel group and syndicate in the region as well. Have you noticed that the risk capital that you were mentioning earlier, because you're used to risk capital, which means that you're basically investing with a potential of an exit, but if it fails, you're also comfortable with that because that's what risk capital has to be mentally around that. Are you finding that in your networks and with Weave and what you guys have built, that the risk capital, the risk side of things, it's enabled you to actually be able to build a fund now because investors are used to the risk? Or do you find that investors are still apprehensive on the fact that, hey, isn't everything going to be a win? Why isn't this a win? Where's the success? Where's my turnover capital? Where can I reinvest? I want my money back. Like, are you finding that the risk has changed now? People are more accepting of it and understanding of how this risk works, or it's still too new for everybody to really grasp that, hey, money in is like money lost. You have to accept that and just move on.
I would say so. I'm just trying to kind of go back in my brain about like when I started because originally, yeah, like we started with an angel syndicate, Red Thread Ventures, and we started doing investments through that group in kind of mid 2020. There's 21 companies in that portfolio in the angel syndicate. We've had two exits. Um, a couple companies are not they've either failed or they're not going to return capital, but a couple companies are up a lot. So the portfolio as a whole is still doing very well. So there's probably about 50 investors that have invested in those deals, like in kind of the syndicate group. And then we have our fund now where we have 30 investors. There's some crossover between the investor groups. Um, Honestly, I can only think of like one example where I've had any kind of negative sentiment from any investor in terms of like urgency to get their money back or get an exit or hey, it's been 3 years, why aren't we seeing something? So I would say like it's I think people are generally aware of what they're getting into when they're investing in either an early stage venture fund or directly as an angel in like a pre-seed or seed stage company. It's a long journey. And so I think again, part of like my job, and you know this as well, being a fund manager, like you need to educate your potential investor. You need to do that KYC of really like, okay, do you understand the asset class? There's all the legal disclaimers, of course, in our subscription agreements for any of these funds or private companies that talk about this. But I think it is the responsibility of the GP or the fund manager or the person, raising money for their company to make the investor know that it's a long journey and there's a high likelihood that you're not going to get that money back. But in the rare scenarios that you do, the returns are worth that downside potential, right? So that's yeah, like I think it really comes down to just how well you get to know your potential investors, and it is your job to make sure they're aware of kind of what the asset class entails.
Yeah, it's an interesting space because, like you said, you're going into an area where there was limited, say, understanding. Like I think maybe back in the day, everybody was investing in Bre-X. Maybe that was their first forte into on the Western side to investing in something that was going to generate a lot of capital and did generate a lot of capital. Unfortunately, it made a lot of money for some, and the ones that held on too long, maybe it didn't work out so well for them. But there was a lot of learning. But then there's also what comes with emotional attachment to investing, and obviously uneducated factors to it. So to your point, as a GP, you're educating your investors, you're driving them forward. Are there kind of some notable pieces that you found while working with your LPs throughout the last 4 years and angels? There's probably not a lot of difference between high net worth and angels. They kind of all mix together. They're either hands on, hands off. Are there any learnings that you found while trying to raise these funds that were notable enough that you could share to help other GPs out there, or even startup that are looking for investors? What are some of the things that they kind of pushed on you that they wanted you to be able to represent for them when it came to taking in money?
I don't know if anyone really pushed anything on us. Like I feel like one of the biggest learnings that I've just had as someone raising money for things, like you need to really qualify the people that you're going to approach to ask for money. Like you have to do a good job of qualifying your prospects. But this is like any sales job, right? Like if you're a software company, you're selling enterprise software. Like there's a lot of work that goes into just who's your ICP, how do you qualify, like what, and then when you get on, when the sales rep gets on a call, what are the first five questions they're asking to really qualify that lead and make sure they know that it's worth their time, because it's going to be a long closing process. These are like long sales cycles. This is like raising a fund is like enterprise sales. So you have to have that kind of like sales mentality of, okay, this is a serious sales exercise I'm doing. I need to build a proper pipeline. I have to qualify my leads. I'm building a funnel. Like I should know conversion percentages between one stage in the funnel where, okay, like maybe I think they're qualified, and then the second stage where they're actually qualified. Like you should build some metrics around this. Like there's a lot of thought that I think needs to go into that fundraising exercise beyond just, okay, let me talk to as many people as I possibly can. Like it is an exercise of like numbers, qualifying leads, like there. And I think a lot of people, and myself included, like you go into this and you're kind of just like, okay, like I'm just going to talk to as many people as I can. And then in hindsight, you're kind of like, I wasted so much time talking to like 50 people that had no interest in buying my product. In my case, like, investing in our fund, right? So that's just a learning for anyone. That's not like, I don't know, some of these lessons you just have to learn, and it's okay. And you learn them, and you do something slightly different and get better, right?
No, I love that. Like when you take the approach of, as you discussed about government intervention, when you make an investment, maybe they can bring in extra dollars to support that investment. That educates and builds the ecosystem. It gets things moving forward. And then you start to look at, hey, I'm going to go after some. Do I want to be a sniper shot or do I want to be a buckshot? And you probably, the easiest way is to focus on being a buckshot, because that way you're going to get a lot of information back and start to make decisions. And then you start to get a little bit more focused. And what you're kind of sharing is that, just like if a government's going to match your investment, they're going to be focused on, is this going to make us money? And it's the same when you're looking at it from an enterprise software deal. I got to be hyper focused. I want to make sure that I'm not doing the buckshot. I'm going in with this sniper shot. I got to find the right people that understand our business so that we can sell them through and drop down that 18-month close window down to 6 months or down to 4 months. And that becomes a very focused approach. Are you finding that while you're working on this and you're raising funds and trying to be as focused, are you educating your founders and startups along the way at the same time on how they can refine their pitch and their focus? Because at the end of the day, if they're not raising and closing money, they're not going to get to the success they're looking for. And then you're obviously not going to have the success you need in your fund. So are you educating them along the way? Because obviously it's just as crucial on both parties.
Yeah, 100%. And you like hit the nail on the head right there. I actually think what I've realized is one of the most practical ways that, us as a firm and probably most GPs, like I think when you get to a certain scale of fund, like maybe you can start to add value in different unique ways that might not be available for a smaller fund. But for us as a small fund, it is actually around like helping the companies raise money, like helping them with their deck, helping them with their pitch, helping them build a network. Because we've been spending all this time building networks with people that would probably invest in this company directly, right? Either through our fund or directly in the company. So that's actually like a huge part of like actual practical value that we can give to startups because we have access now to like a way bigger network than most startup founders would when they're going into like that first or second round of financing. Just because we've been spending so much time building relationships with potential investors for our fund and then figuring out a lot of these things on like how to build a real like fundraising process that again, like if you're a startup founder and you're raising your first round of financing, you are going to go into it with more of like a catch-all approach. Like you were going to talk to a lot of people, which is great, but probably not understanding of like a real fundraising process unless you've done it before. Like of course there's founders that we connect with that it's not their first rodeo, like they've done it before. In those cases, like we're probably going to learn a lot of like learning a lot from those folks, right? But a lot of the time it's not like that, and that is somewhere I think we can help a ton with our startups.
I love that. It's so crucial because you're investing in them because of the fact that they're going to get to a scale up. And companies that are investable means that they have the potential to become a scale up and obviously a larger company, or you wouldn't have looked at them because they would be too localized and not enough potential for high growth. So you're obviously going to look at it and say, what can we bring outside of the value that we already have brought, which is funding? What other things can we enable them with? And I love the fact that you're looking at this from building networks, building relationships, and helping them grow that facet because you've had to do the same thing. Can you talk a little bit about what it means to build a relationship? I kind of think that today we're all so zoomed out or zoomed in that we potentially don't even know what relationship building is. We might just think relationship building is having another Zoom call and people are going to love me and throw $100 million at me.
Yeah, I mean that's a good point, right? Like I think even for myself, like being earlier in my career, like when I started, like my first job after grad school, really my first like ever real quote unquote job was working for a family office, and that was the only time that I had like a real kind of in person culture even like as soon as I was done that job and I came back to Canada, like COVID happened and everyone's on the computer for the last 4 years. So I think even like maybe in the last 6 months, like some of that started to shift. Like more and more people are just getting sick, frankly, of being on the computer for like 7 calls in a row. Right? You want to get out in person. So I do think even for myself, I'm still trying to remember that actually like you need to get out of the house, you need to go to events, you need to go to and you're not it's not always going to be like a business closing event when you go to like meet some people for a networking thing. Like it's not always going to lead you to that next deal closed or the next investor. Like you can't always just go into it with like only that on your brain because you're going to be disappointed sometimes. But you just have to do that. You have to like put yourself out there and let people know what you're up to. Offer support. Like I think like one of the most practical things that people can do is like if you meet someone and you get a real good sense of what they're up to, you're asking a lot of questions showing like genuine interest in what they're doing. And if you can like help them, like I always make a point of doing this. Hey, like, I noticed you're working on this like prop tech startup. I literally talked to a founder yesterday. I noticed you're working on this prop tech startup. Like, have you talked to X, Y, and Z investors? Or have you talked to like X, Y, and Z companies? Hey, these are two of our portfolio companies that I feel like might be great partners for you in some way. Maybe there's like a referral opportunity there. I'm not asking him for anything. Like maybe we'll invest in his company one day. I don't know. But at the same time, like it's really about like it's funny. Like I like this guy Gary Vaynerchuk. I don't know if you know who he is, but he's like a marketing guy in the U.S. He's been very successful, early stage investor as well. But he actually has a book on this called Jab Jab Right Hook. So it's like give then ask. And I actually think it maybe should even be like give some more and then maybe ask. Right. So that's I think a big part of it is like you want to be able to ask people, hey, like can I make this intro, can I help you with something, um and that's just I think a good way to approach like doing business and building relationships, frankly, right? So be in a physical space where you can actually meet people off the computer, so actually in real life, and then try to build genuine interest in what someone is doing, follow up with people, write thank you email. Like these are practical things you can do. Write thank you emails if you met someone. Hey, I really enjoyed our conversation, was wondering if I could connect you with this person. I feel like they might be able to help you with X, Y, and Z that we were discussing when I met you yesterday. So those are like things that I'm always kind of thinking about, right? And it's again like, yeah, you're not gonna not every meeting or not every business event or networking event is going to lead to like your next deal close right away. But I think if you build up like enough good karma and good energy in the world, like good things will eventually come to you. Like, or you'll be able to ask those people for a favor that will lead to good things. So I don't know. Those are just things that I'm always kind of thinking about.
They're brilliant. I think it's a great segue into how people should treat relationships. Is that it's not always about what I can take; it's what I can give, and what can I keep giving to help support that. And I love the idea. And Gary V is hot and cold. I think for myself on some things I
Yeah,
like and some
yeah,
things I think
totally.
are ludicrous. But sometimes I guess you got to be out there in order to prove a point. But I do love the fact that you put that emphasis on get out there and be personal, be in the space, and show some interest. I think that's the tough one. Again, to your point, is that if you spent 4 years behind a screen and now you're getting in front of someone, your interest level may seem like you're in front of a screen, that there's no real human connection, there's nothing there to pull on. And I think the outcome is going to prove itself is that if you don't have that connection, why do people care? What do they care that you're going to do anything for them, or that there's any return or any give from that? It just becomes lost in the minutia because it's not really important to them. So how do you make yourself vulnerable enough that that person wants to help you at the same time that you're guiding and helping them, as you mentioned, from the startup side? So they're not just coming to you for money; they're coming to you because you've built a strong network. Because when you lean on, hey, talk to this investor, that investor actually shows up and puts some value into that startup. So I think that's very valuable insight on sharing how founders, other GPs, could start to build relations and actually raise that next round of funding or raise that value. And I love the fact that you treated it like a hit list. You're refining your process, and these are just parts of ways that you need to build a relationship in order to get people to invest in you. Because if you're going to invest in other businesses, these are the things you have to do in order to get them to trust you, that you're a good venture backer, and that you're a good GP in what you do.
Yeah, exactly.
I love it. So now today you've kind of moved your way through. You guys have invested in lots of different companies. Maybe you can share little bit more about where you sit as a fund, the types of focus that you have, the areas and companies that you're investing in, and what it looks like for the next 5 years. What is that venture going to turn into? Is it the thesis changed? Does the model change? How are you guys focused today, and what does it look like?
Yeah, that's a great question. I mean, we launched this fund in July 2022. Um, we've raised $6 million for Fund One. So our goal is to invest into 15 companies. So pre-seed, early seed stage, kind of that like, if I was to put a valuation on it, would be like kind of $3 to like $10 million Canadian post money valuations. Um, we're maintaining some of the capital as well for follow-ons. We've already done some follow-ons in our early investments. So the goal for us is really just finalize the closing for this fund. So we're basically at that point now where in the next couple of weeks we'll probably announce something on we've completed our final closing for Fund One. Um, we'll probably do a few more investments in kind of Q3, Q4, 2024, and we'll finalize deployment for Fund One sometime in mid 2025. And then just think about kind of what we want to do from there. I would like to do a fund two, but I think just it's really important that if you're going to go down that journey, that you really think about kind of everything that's going to go into raising you know what would be probably a much larger fund than Fund One for us. So yeah, I'm just thinking about that and kind of, thinking about, how the thesis will evolve. I think this fund, it was very kind of local focused in terms of like, focusing mostly on Western Canada. I think for a second fund, we'd want to be in a position where we could focus more like Canada broadly, as well as maybe some opportunity areas within the US. Um, and also focusing more on like providing a real substantial like lead check for a pre-seed or seed company, so kind of that 500K to $1 million first checks, whereas right now it's more like 250K is kind of our first check. So yeah, I mean there's a lot of things I think that can evolve within the next couple quarters, but I've just been super grateful to be in this position where we're able to work with all these companies, and to say that I've learned a ton would be the understatement of the century. Like it's been the most rapid and incredible learning journey for me, as an entrepreneur and obviously as an investor over the last 4 years. Just being able to be in the driver's seat and work closely with these entrepreneurs has been like the most amazing thing that's ever happened to me. So, yeah, I'm just super grateful and excited for the future.
I love it. Well, you've made some great investments. There's some fantastic companies in your portfolio that I've seen and talked with over the years. So I love it. You guys are doing a fantastic job. We're going to kind of transition now into rapid. Or no. Before we do rapid fire, we're going to have to do the 60-second spot. So we're going to do the 60-second rant. The way this works is you got 60 seconds to rant about anything that pisses you off in the world, and I will
Ugh.
work my best to form a rebuttal against it, and then you'll close it off. I'll set the timer. I will say that no one's ever hit 60 seconds, so know that you can just go at full on, and we appreciate all of the share that you can make. So when you're ready, you're off to the races.
Yeah, I mean, I'm just going to say it. Like, I think DEI and identity politics have been the probably worst thing that's happened to society and culture and decision making processes for entrepreneurs and investors over the last decade. It's basically degraded kind of the fabric of society and culture and has totally eroded quality decision making processes when it comes to hiring, when it comes to investment decisions, when it comes to doing business. It's created a ton of division. Yeah, I hate it. So, and it's something that I've been up against too as a GP raising funds, right, for the last 2 years. Just this kind of emergence of identity politics within decision making processes is just like I'm allergic to it. So yeah, that's me being super honest and transparent, but that's me ranting as well, right? Like I think it's yeah, something needs to be said.
I love it. Well, you hit the 60 seconds, so you're the first. I love it. And it's a very direct and poignant discussion because I think, on both sides, you want to contest or share or be against or support it. And I'm going to say that the pendulum has swung very far to the left, and it's swung far enough that it affects a lot of businesses and a lot of business acumen and the way things have been operating, say, for the last couple hundred years. Do I think that there is certainly a middle ground? 100%. And the middle ground will be found, and it needs to be kind of sought after, because you're right. It affects decision making. It affects process. Is there room for it? Yes, but not to the extent right now where it's causing businesses to fail. It's causing issues around people getting investment because the teams aren't structured the way that they should be, or the way that the policies, the internet trolls are looking for. So yeah, there is a lot of whimsical processes inside of it, and I wonder what the way is forward that allows for the balance so that investors or businesses or society are able to actually get behind it and make it a force of change and support it so that it isn't something that is more of a negative outlook because it's in your face every day. Have we all learned our lesson? Have we all learned that things have to be balanced out better? And what are those processes that now have to be enabled to make the change? It's kind of like how ESG has gone through its moment of everything needs to be fixed this way. And then people realize that companies are failing. There's not enough money. No one wants to invest because the companies aren't getting supported. So now these processes are all under fire because the pendulum went so far to the one side that they forgot that they have to actually regulate this and manage it better so that business and business process can support it financially, resource wise, etc. And I think we're kind of in that same space right now with the identity issue, as you mentioned. But is there a way to make this more efficient and effective for venture or for anybody really out there that's operating a business?
Yeah, for sure, right? Like there's definitely a middle ground. Yeah, I don't know. It's just it's just frustrating, I think.
It's true. It's a tough one to kind of dive into and not say that we're going too far. And we all want to be. I think the part is that somewhere in our journey in life, we all want to find somewhere where we fit in and we can contribute
Totally.
and we can execute on. And I think that it has to be nothing in life is going to be even and equal. No matter how you skin it, people have biases, people have whatever they're born with, whatever. But I think that there, instead of fighting and crying foul, there should be a balance of hustle and opportunity that's
100%.
created. And I think you have to figure out what that is personally and go after it. And if it feels wrong, it's wrong, move on. They're not the right investor for you. And I've heard this before as well, just using the investor side as a way to make it more practical, is that if it isn't working, don't stick around, move on, go to an investor that believes in you and trusts in what you're doing, and you're going to get more out of that relationship.
Totally. Sound advice.
I love it, man. Well, it's a great rant. It's a great rant. I think there's probably a whole show we could do on that.
Oh, yeah.
Well,
Many
before we jump,
conversations.
oh, exactly. Before we jump into the rapid fire business section, I'm going to have a couple of questions for you. What's the toughest lesson you've learned as an investor?
Yeah, I think just, when I got into this, like it was kind of peak like bubble, right? Like interest rates have been historically low for almost a decade. And my initial exposure to venture was at a very weird time in terms of kind of, market dynamics. Companies were raising way too much money way too quickly at way too high valuations. And so that's what I kind of got used to as almost the normal. Fast forward a couple years, like I quickly realized that was not normal. There was way too much money in the system. And that's just something to take note of, right? And that I've been reflecting on is really like, okay, what is kind of quote unquote normal in terms of valuation, when companies should raise money in their life cycle, how much money they should raise against what milestones, like all these types of things, right? I had to kind of recalibrate like my normal and like what feels right. Because when I got into this, it was just so out of whack in terms of kind of market dynamics. Like we were talking before, um, there have been a lot more money thrown into the system than what is natural.
And have you found that GPs have shifted to support this now, but have founders also found the ground level of where things are normalized, or are they still believing that their company's worth $100 million with $1,000 of revenue?
Yeah, I mean it's I think GP's probably shifted first, right? Because we're having to raise funds from LPs, like we're kind of the first people to kind of feel some of these changes and really shift. Entrepreneurs are now shifting. Like I still see companies that are raising a lot of money too quickly at too high valuations, and so I don't know. Like I mean, I think it's just going to take a little more time for everyone to kind of recalibrate to what is normal. And even like today, like we see AI companies pre-revenue, that raise like crazy amounts of money at crazy valuations. So, but again, like as a fund manager, like you really just have to think, okay, what are the companies that make sense for my portfolio and my portfolio construction? Maybe there's fund managers out there, like if you have a $1 billion fund, like maybe you're okay throwing like $100 million at something at a ridiculous valuation that doesn't make any sense logically. Because, for your fund to be successful, you have to return $10 billion on that. Like it's like something, the exit has to be so big that it almost doesn't even matter what the entry price is. If you're an early stage venture investor, like that's not you. So you got like we need to know that we're playing different games, right? So yeah, that's something I think about all the time.
That's a very valid point. You're coming in at different sections of the
100%.
ecosystem, so you can't expect $1 billion returns with a dollar. There's you have to figure out where your stream is and where your take is on that investment cycle.
Yep.
What piece of advice do you give founders 9 out of 10 times?
I mean, trust the process, work hard, let the market decide, kind of how you want to make decisions. Before you raise money, make sure that you understand really where, what your customers are asking for, where the customer demand is, like get some data points on that, build a real strong narrative around kind of your testing of a hypothesis within the market in terms of the product you're selling, the problem you're solving before you start pitching investors. So like understand a lot about your business and your marketing, your customers, and the problem you're solving before ever thinking about raising capital. I think that's, if I had to boil it down into kind of one thing, that would be it. Is before you raise money, like really understand your market, really understand your problem, really understand the customers you're going after, and put a lot of thought and ideally get some data to build a real strong case as to why you should be even raising money. So that's what I would say.
I love it. One of our companies that recently did a small exit. We did an exit interview, and that was one of the things that they said. They said I would never raise funds again until I have actually built the business, solved the problem, understood the problem well enough that I could then raise funds against. So well shared. I love that. Um, what would you change about venture if you had the opportunity? What's one thing that you could change about venture?
I think I think fund managers and investors understanding kind of where they fit into the venture landscape. So what I mean by that is like us as a pre-seed fund, the opportunities that make sense for our fund and our portfolio construction and generating fantastic returns for our investors that are in this type of fund that we're offering is completely different than a fund that is 10 times the size of ours. That they are playing a totally different game. And I think there's been too much focus on we need to only invest in companies that can generate $100 million in revenue and IPO in the Nasdaq for multi-billions of dollars. Like that, we're not playing that game. Like we're investing in companies at like a 3, 4, $5 million valuation. We don't need them, nor do we think it's really even possible for most of our companies to IPO on the Nasdaq. Would it be great if it happened? Of course. Is it realistic? Probably not. Do we even need it to be realistic? Probably not. So just really understand like the game that you're playing as an investor, because most likely the game you're playing is totally different from the game that you see, the investors on Twitter or LinkedIn or like Sequoia or A16Z. They're doing something totally different.
No, that's great. Well said. Well said. Who is your hero, mentor, and why?
Oh, I feel like I have a lot of mentors. Like, I've been very, very fortunate to come across and build relationships with and now work with a lot of incredible entrepreneurs that have done amazing things in their careers, that have, you know, done awesome things in entrepreneurs and business people, but are also just great human beings, that have a lot of kids, that are great dads. So been very fortunate to work with a lot of those people. A lot of those folks I could actually call investors in our fund, which is just, a dream come true for me. Um, I'm not going to name any names, but there's many of them, and they definitely know who they are that have supported me, very generously over the last 4 or 5 years. Um, I would say like someone that I look up to probably in like business, and it's very cliche, right? And most people, like a lot of people would probably say this. I think Elon Musk is like an incredible entrepreneur, and it's unfortunate that in the last year he's been very, I think, put into like a very negative box within kind of the media and the political sphere. Because in terms of like value generated in the market and level of problems that he's been able to tackle in the last 20 years, there's no one on the planet that can really come close to generating that much market value. So yeah, I'd say like as an entrepreneur, that's definitely something I look up to. Again, like probably extremely cliche and like obvious answer for like a lot of young entrepreneurs to say. But I would say like in terms of his track record and companies that he's built and things that he's gotten right that people totally wrote off like a decade ago that have now been proven to be correct. There's no one else really in the bucket. Yeah, so that's what I'd say. Is there's a lot of people I've been fortunate to work with that I definitely call mentors for more reasons than just business reasons. And then I would say like in kind of the general sphere of entrepreneurship, like Elon has done some ridiculously impressive things over the last 2 decades.
Totally agree with that. I love it. All right, we're going to go into the rapid fire questions. The way this works is from your point of view or your perspective as an investor, you pick A or B. All right, here we go. Founder or co-founder?
Founder.
Unicorn or a 4-year 10x exit?
4-year 10x exit. Hands down.
CPG or tech?
Tech.
AI or blockchain?
AI.
First money in or Series A?
First money.
Board seat or observer?
Observer.
Safe or convertible note?
Convertible note.
Lead or follow.
Lead.
What do you look for to make your investment?
Quality of the team.
Favorite part of investing?
Working with entrepreneurs.
Number of companies invested per year?
10.
And verticals of focus?
Vertical SaaS, AI infrastructure.
Perfect. All right, personal side, same scenario. Rapid fire, pick A or B. Favorite movie and what character would you play?
That's such a hard question. Oh my god. The Avengers, probably Hulk.
I like it. I like it.
I think there's like a good kind of dichotomy between the two personalities, and there's a lot of like I think realities with most human beings. Like we all have kind of that like fiery side where we just want to get shit done, and then we all have more of like a reserved, rational. I got to think through things very, very critically before I do anything. So yeah, that's what I would say.
No, I like it. It's good. It's good. Favorite book?
um, Harry Potter,
Ah, very cool. Favorite sports team?
Edmonton Oilers. Just to live in Edmonton, and
Ah,
I'm a huge bandwagoner. I don't even really
there
follow
was.
sports to be honest, but I live in Edmonton, so I feel like I have to say that.
Ah, they're great. Yeah, they were so close. Um, Cake or fortune cookie?
Fortune cookie,
Superman or Batman?
Batman,
DC or Marvel?
Marvel,
Football or football?
American football. Sorry,
I
sorry.
had to throw that one in there just because it makes you think. Wait a second. Yep. Uh, and I'm going to probably make the guess on this one, but I'll let you answer. Elon Musk or Oprah Winfrey?
Elon Musk,
Big Mac or Chicken McNuggets?
chicken McNuggets.
I love it. Well, Mark, it's been a real pleasure having you join us today. The last question I have before we shut down is what is your superpower?
Relationship building.
I will second that motion. I will say you are a great people person, and it's been a real
Thank
pleasure
you.
getting to know you and meet you over the years. But of course, having you on today and sharing all your insights, it's been awesome. And the way we like to end our show is we like to give you the last word. So anything you want to say to investors or founders, I turn it over to you. Thank you for being a rock star, and please share how people can get a hold of you at the same time.
Thanks, Jeffrey. Yeah, I would say just keep building, keep working hard. Um, everyone discounts someone I think at the start, but if you can just persevere and show resilience, it's incredible what can be accomplished in a decade. I think it's often that we overestimate what we can do in a month or a year, but totally underestimate our potential in a decade. So I think that's something for everyone to remember is keep working. Don't be super arrogant about it, but keep doing your thing, and eventually you're going to get to wherever you want to go in life.
Awesome. And how can people get a hold of you?
I mean, LinkedIn's good, right? Like I have a LinkedIn. So definitely follow me on there. You can go on our weavevc.com website. We have a blog. You can email me, mark@weavevc.com. All those things are totally fine. I'd love to talk to, any entrepreneurs, founders, ecosystem partners, investors. Love to have conversations with those guys. So yeah, thanks again.
Perfect. Thank you very much for your time today, Mark.
Awesome, man. I really appreciate it. Hey,
Thank you. It was a great conversation with Mark. I really enjoyed the part where he really talked about what it takes to be a GP, what you have to do as a money manager, how you have to work that hustle to get in front of the right investor, and hyper focus. Don't do the buckshot. Just hyper focus on the people that you think would have an interest in what you're selling. Just like enterprise software, you want to reduce that funnel, build that funnel up to get the right people that would be interested in the direction you're taking. Numbers, qualified leads, focus, and as he said, give. Maybe ask. Really offer the opportunity to help others out along that journey. I think is super crucial and important. I love the way he talks about that, and 100% agree with it. A lot of great information there. Um, can learn a lot from the process of working with early stage companies while raising a fund. We have a lot of similarities in that sense, which is great. So Mark's a great person and certainly a great addition to the ecosystem on how he works with founders and businesses and startups and investors. And he's done a fantastic job on running some great companies in their portfolio. So very exciting to see where that's going to go over the next few years with his next funds and what they've been able to accomplish to date. And they have some fantastic companies. So big fan. Thank you again, Mark, for all of your time. And thank you for joining us today. If you've enjoyed this conversation, please feel free to share with your friends, subscribe to our YouTube channel, or please follow us on Spotify, Amazon, or Apple. You can find us on all social platforms, including LinkedIn at Supporters Fund. Your support and comments are truly appreciated. Please visit us at supportersfund.com or startup events at openpeoplenetwork.com. Thank you and have a fantastic day.